back to the
Good morning everyone and welcome to a new episode of our show. I'm Anfel Yousfi and this is my co-presentator,
Martin.
And today's topic is about globalization. We will be welcoming a lot of guests from all around the world to speak about this interesting topic. Decades ago, a firm seeking capital for their operations or for an expansion would have had fewer options in terms of borrowing and financing, as they could only access the UK banking system. Thanks to globalization, businesses can seek the best borrowing opportunities as they have access to a broader national and international capital markets to finance their activities. They can shop worldwide for a loan, they can find lower interest rates and borrow using foreign currency if it looks more attractive to them. Martin, can you please give us a small definition of what globalization is?
Sure. Globalization refers to the process by which the world is becoming more interdependent. It is the result of cross-border trades of products, services, information and investment between separate economies. Thanks to centers of technological improvement and international cooperation, the UK has become more interconnected than ever. As the UK has been able to become a country that is widely open to the other markets and economies, and most importantly, how did the globalization impact the UK banking sector? To answer the problem, we will first take a look at the history of globalization in the UK within the factors that led to the phenomenon, and then we will study the effect of globalization on the banking sector in the United Kingdom with the benefits and consequences.
By the way, Martin, I heard you have a guest coming.
You're perfectly right. I'm happy to welcome Shazer. Can you please tell us more about the history of globalization in the UK?
Sure, I would love to. Let me take you back to 1888, where London has been an ever-growing international finance centre, as well as a home to global markets and banks. In the 19th century, the size of the UK's financial sector relative to its economy has been increased dramatically. The assets of the UK bank accounting for about 40% of the GDP, according to the ex-governor of the Bank of England, Mark Carney. Being at the centre of the global financial system also increases the UK manufacturing and creative sectors' capacity to compete internationally and expand investment options for the institution that manage British saving, as financial services represents one of the UK's largest exports. Let's now briefly explain how globalization became an important part of the UK market. From 1860 to 1914, the UK was hit by the first wave of phenomena. Europe was strongly affected by internationalization and capital move relatively freely between countries. The most important drivers behind this wave are both the new technology and the embracing of liberal trade policy after years of protectorism. During these years, the UK was the world's leading economy. In 1816, gold standard was introduced by Great Britain, which made the currency gain a stable value in relation to gold. The second wave of globalization happened just after World War II. During this period, two big organizations were established, the World Bank and the International Monetary Fund. We can also know that political trade between barriers have been relaxed in many ways. The third and last wave is the only one leading factor to technology that we know and the current world.
Thank you very much for sharing. That was actually really interesting. Would you mind sharing with us the factors that paved the way of the globalization in UK?
Yeah, sure, I would love to. Now that we know the process by which globalization was introduced in the UK, let's focus on the factors that paved the way for this phenomena. Broadly speaking, economic, financial, political, technological, and social factors have paved the way for globalization in the UK mainly. Firstly, advances in the information and technology have not only allowed companies to rapidly globalize their products, but also made the collection of information to measure and manage financial risk and to price and trade complex financial instruments a lot easier. Technology made international transfers possible, which is the first operating form of the global electronic financial system. Secondly, political factors made the process of globalization possible, as it led by a number of national and international institutes and countries in formulating policies. An example of that is government policies which are designed to facilitate trades between economies. Lastly, economic factors, which include lower trade and investment barriers, pave the way to an interconnected world. The expansion of financial sector is also considered an important force of globalization. Moreover, policies directed towards liberalization of the national financial market and capital market increased not only capital mobility but also financial integration. All these factors combined made globalization in the UK possible, especially in the banking sector, which is one of the most touched sectors by this phenomena.
Thank you so much for coming. It was a really interesting topic. Thanks.
Thank you for calling me. I'm glad to be here.
My pleasure.
Okay, so now that we changed our backgrounds, let's introduce our new guest, James, who's going to speak about the effects of globalization on the banking sector. He came all the way from Singapore.
All right, thank you. you. So if there's nothing else, I'll dive right into it.
Yeah.
So let's now move on to the effects of globalization on the UK banking system. As the former governor of the Bank of England mentioned in his speech during the celebration of the 125th Financial Times anniversary, London is the home of the global markets and banks. Globalization has intensified interdependence and competition between economies in the world market and has a large-scale impact on the banking system of the UK. We will see in this part the different effects of whether these are positive or negative. The first noticeable effect is the substantial increase in cross-border financial activity. Investors seek the best investment opportunities from a broader range of countries and currencies. Multinationals now have access to a wider national and international capital market to finance their activities. The UK is capturing the most significant share of international bank lending and borrowing. The second effect of this phenomenon would be increased competition in the UK. For instance, between 2018 and 2021, the UK's market share declined from 17% to 15%. In contrast, France's market share increased from 9% to 30%, meaning that the UK market is becoming less and less controlled by a specific number of companies. Therefore, the UK banking sector is becoming more competitive. One reason that could explain the decline in market share is more banks, especially foreign banks entering the UK market. Indeed, 1,400 European companies applied in 2020 for permission to operate in the UK despite Brexit. This has led to an increase in competition, which implies an increase in the efficiency of banks, as the increased competition forces banks to operate more efficiently, which is a direct link to globalization.
Thank you so much, Amos, for this insightful talk. So now let's welcome our next guest, who will present some graphs to explain these effects.
Thank you so much for having me.
Thank you. Perfect. Let's now welcome our next guest, which is Jazz, who's going to explain the effects of, who's going to demonstrate the effects of globalization on the UK banking system. Okay, so Jazz, do you think, is there a correlation between globalization and bank efficiency, bank profitability, and just the profitability of the banking sector in the UK?
Yeah, I believe so. Because there is a strong positive correlation between banks' efficiency, their profitability, and the globalization. So to demonstrate that, we focus on the barriers to globalization for the UK. Since the UK is really integrated into the international banking, it is not fair to judge it by its highest points, and we instead focus on the lowest points. So here we can see that the returns on assets of UK banks, which is the measure of profitability, lowered during the financial crisis in 2008. And also we can see that during the period of Brexit, after the 2016, there is also a small decline in the profitability of banks. Also, there is another measure supporting our claims. So here is the bank's return on equity, which is also a measure of banks' efficiency and their profitability. And here we can see the same trend on the graph. Also, it's important to mention the net inflows of foreign direct investment into the UK, as it is a measure of how globalized the UK banking system is. So here we can see that during the crisis periods, after the Brexit and during the financial crisis in 2008, we can see that there is a decline in foreign direct investment, which is a sign of deglobalization for the UK. However, even though there is barriers for the UK, London still stays the financial hub of the world, as it is strongly integrated into the market of international banking, and even such barriers as financial crisis and Brexit, which bring uncertainty to the investors, there is still inflows of foreign direct investment into the UK, making it one of the biggest banking shares holder.
Amazing! Thank you so much. So basically, what you are claiming is that because the UK is really globalized, the barriers to this globalization are not affecting the UK banking system that much, right?
Yeah, that's what the figures show.
So amazing! UK is still a really attractive market.
Yeah.
Thank you so much, Jas. I really appreciate having you.
Nice to meet you.
Thank you. So now we have Olivia from Taiwan, who's going to present the consequences of globalization on the UK banking sector, and she's going to also look at the positive and negative aspects of this globalization. Thank you so much for coming.
Okay, let's start. Now that we understood how globalization impacts the UK banking sector in many different ways, we should investigate the effect of globalization on the financial and banking sector. There are two sides to the impact: positive consequences and negative. First, let's talk about the positive side. Increasing the open labor supply is a relatively new stage of globalization that is still rapidly developing. According to those who feel globalization will benefit countries as a result, improve productivity, enable businesses to produce more output for the same amount of input, earn more income, and eventually generate more GDP, boost economy growth, and making countries like the UK more attractive. On the other hand, the negative consequences. The financial industry can cause significant economic harm. For example, in the subprime mortgage crisis of 2008, risky lending by some banks sent the economy into a spiral, causing the Great Recession. Regulatory changes implemented since they may contribute to avoiding a similar crisis in the future. This crisis started to the United States, but because of globalization, it has extended to many European countries. The banking business is essential to today's economy as the primary source of credit. It provided grants for customers to buy car and house, and businesses to purchase equipment, expand their operation, and make payrolls. Financial globalization tends to reduce credit constraints for developing country producers, making them less exposed to the financial crisis.
Thank you so much for this insightful talk, Olivia. We learned so much with you. Thank you. So now we have a new guest, which is Shamkhal. Shamkhal unfortunately could not join us on the set, but here he is on Zoom from Azerbaijan. Shamkhal, how are you?
I'm fine, thank you. How are you?
Good. So I heard that you were presenting the consequences as well of the globalization of the UK banking sector.
Yes, I am.
Perfect.
So, can I start?
Yeah.
We can cut that.
So, first of all, I would like to say that FTI, they are a big part of globalization, and that understanding their positive and negative effects on the banking system is very crucial.
Yeah.
So, first of all, I would like to say that the effects of FTI are greatly influenced by how they manifest themselves. So, do they manifest themselves as new investments or as mergers and acquisitions of already existing banking networks? So, according to the report called Understanding Banking Sector Globalization, financial FTI or FSFTI frequently involves the purchase of banks in the host country, which is mergers and acquisitions.
Mm-hmm.
So, also, it should be noted that in terms of employment, the effects of FSFTI is more favorable than the effects of FTI on the economy. So this is because the host economy will have more efficiently allocated financial resources. And well, in addition, I'd like to say that when with screening and handling problems loans more aggressively, foreign-owned banks appear to contribute to the overall health of local banking institutions. So, and finally, regarding the FSFTI, I would like to say that they stimulate improvements in bank supervision, which has a positive impact of the economy as they decrease the risk of financial crisis. So when we talk specifically about UK, the FSFTI, the foreign banks in the UK would have some, of course, negative and positive effects. So let's start with advantages. So firstly, foreign banks presence efficiently increases the amount of funding available for domestic projects. And secondly, foreign banks, they improve the quality, pricing and availability of financial services in two different ways. So the first way is that they actually provide such complex services, and the second way is through healthy competition with domestic financial institutions. Of course, there are also negative impacts of having foreign banks in the UK. The main one is that there is the risk of importing shocks from their home countries, which is one of the main consequences of globalization.
Amazing. Thank you so much, Shamkhal. It was really insightful talk. We learned a lot about the negative, the positive effects of globalization on the UK banking sector. And we're really sad that you could not attend our film and set today. But hopefully we'll see you next time for the next episode, right?
Yes, of course, sure. I'll be there.
Thank you so much.
Thank you. Thank you for having me. Thanks very much.
To conclude this episode about globalization, let's do a quick recap. Today we evaluated the effects of globalization on the UK banking sector. Generally speaking, globalization increases trade and competition, as well as capital and labor mobility. However, it also has negative impacts, such as making tax avoidance easier, increasing structural unemployment, and increasing the power of specific multinationals. In this episode, we focused on the UK banking sector. Throughout our analysis, our guests and what our guests said, we noticed that the main effects of globalization on the UK banking sector were firstly, the substantial increase in cross-border financial activities, which led to restrictions when seeking for an investment borrowing opportunity. Secondly, the high increase in competition. And finally, more efficiency regarding the banking sector. We also saw some of the positive impacts of globalization on the sector, such as improving quality and pricing of different financial services, providing more complex services and stimulating the presence of supporting agents. On the other hand, we saw that globalization sometimes has really damaging impacts on the banking sector, such as the one seen during the financial crisis of 2008, a crisis that started in the US but spread worldwide because of the internationalization of the banks. I just want to take the time to thank again my amazing guests who took the time of their busy schedules to come and talk about globalization with us. I hope you guys enjoyed today's episode.
Thank you so much for listening to us. I hope you enjoyed the presentation.
Thank you.
Talking weekend.